Hello trader, welcome to my weekly video analysis. This video will review the US dollar. Last week we had a very bullish dollar, but we are approaching resistance. Therefore, the dollar could be at a decision spot. So we'll be taking a look at the euro, pound, dollar, yen, and Aussie. But first of all, be aware that this video is intended for a global audience and may not be suitable for everyone. Find out more by going to this link, selecting your country of residence, and contact an appropriate entity. Also, trading forex exchange is considered high risk and may not be suitable for all traders and investors. Therefore, please seek the advice of an independent financial advisor for more information on that. This video is for educational and informational purposes only, and by continuing watching this video, you agree with this disclaimer. First pair we are looking at is the dollar-yen daily chart, and we can see a resistance clearly at 121.86, and price is approaching it yet again. It has attempted already to break that level a couple of times, getting close to the 121, 121.80, but failing about 3 or 4 times. So let's see if this time it will succeed. I'm a bit skeptical still at this point and expect a bigger correction based on wave analysis to the downside. But we are, if you look at the green lines, above support, so we got to be careful with that. And if you look at the 4-hour chart, there is of course that potential to make still a dash to retest basically 121.86. For the moment though, I'll be keeping an eye on this trend line, this resistance trend line. If price stays below that, we might not break up to that 121.86, and if we break actually below this trend line, which we're trying to do, we could see this maybe as a rising wedge chart pattern and perhaps some bearishness down to this support, and then perhaps again a bounce or break spot, and if we break lower, perhaps down to this support. So we have to see, at this moment, price is looking choppy, corrective on the dollar yen. Yes, there is some upside potential here and some space if we break above resistance, but there's also some reversal potential if price starts to break through these support levels and starts to make lower lows and lower highs. We will see actually the same situation and structure on most of the majors. A bullish dollar last week, but also a bullish dollar that is approaching resistance. And in that regard, we'll have to monitor carefully how the dollar will react to that resistance. Is it going to push through it and continue with its uptrend that we've seen the last year, or are we going to see a bigger consolidation and the dollar respecting the resistance and make some bearishness after that? On the pound dollar daily chart, we can see actually that one of the few pairs that has already broken through that particular support level here on the pound dollar, which is of course the dollar resistance. Pound dollar actually breaking through that for some bearishness. The euro and the dollar yen have not done that as yet, and the Aussie as well. So the pound is a bit of an exception, more pound weakness than perhaps other currencies. So what does that mean? At this point, perhaps the pound is a bit weaker and more likelihood of a short, but we still here also have to be careful of the fact that price does not push 144.46, which is the 138.2 Fibonacci level. In fact, that is still possible that this is a correction as long as price stays above that particular 138.2 level. So although there is a break of the bottom, not every bottom break necessarily means a continuation of the trend. So until 144.50, I would say on a lower time frame, perhaps there is the potential for a shorting, but we have to be very careful when approaching 145 also, which is a psychological round level. So, in that regard, as we zoom in to the lower time frames, you can see that this is a very nice channel to the downside, and as long as price stays in this channel, there could be some good shorts. But for the moment, I would be cautious of 145, 144.40, and also actually keeping an eye on this resistance line and this horizontal resistance at 146.70, because once price breaks above it, it could be also a bullish bounce to the upside. Soon we'll continue with the euro dollar and Aussie, but first of all, be aware of these webinars we have this week. Great webinars lined up with Nanette and myself, weekly FX recap, live trading room on Tuesday, Wednesday, and then Wednesday evening, expert opinion on Forex correlation, and Thursday evening, the impact of central banks on Forex trading. So highly recommend these webinars. Take a look at the link to register. All right, moving on to the euro-dollar weekly chart, and we see a big bearish candle last week, and that does give hope for the bears of this euro-dollar that the downtrend can continue. But considering the fact that we've never had such a support actually on the euro-dollar, there is always the potential for a bigger correction up to, for instance, 115, 114 back in this zone on this weekly chart. So in that regard, this bearish candle is a pretty strong candle. In that regard, I would expect price to respect the high of last week, for instance. So if it retests that last week's bearish candle up around 109, 110, I think it's a good shorting zone with a stop loss just above that high, in fact. But now, near the bottom, I do think it's a bit risky to look for shorts so close to a bouncing spot. If it does break below 104.70, we should have some space, some 100 pip space probably. Let me check to the 138.2 level, which is at 102.50, 102.40 in fact. So yes, we do have about 200 pip space. When we break below the bottom, I would not jump in a short right then, right there, but I would look on lower time frames like an hourly or 4 hour for a good retracement, a good pullback for that downside with 102.50 as the target in mind. If price does bounce here, once again, I'll be looking for a potential for price to retrace higher to 112.50 or perhaps even 117 at the very max, I would say, because that's a 38.2 fib, and typically price would not correct higher within a strong trend like the euro dollar. And then last, the euro dollar 4 hour chart, we can see a downtrend channel. It'll be interesting to see how this price reacts in this channel. Will it continue down to 105, or will it break actually outside of this channel and perhaps make a retracement to retest 109 area on this 4 hour chart? Last but not least, the odd USD daily chart. We're in a downtrend certainly, but if you pull up this awesome oscillator, we see also divergence between these bottoms. We see actually in the meantime a double divergence, which warns me that we should be cautious, or I'm going to be certainly cautious with this odd USD to the downside. Talked about the upside potential last week as this expanding wedge could cause price to move up to the top. That it didn't do, but we did get about a 200 pip bounce to the upside off of that support line. Now we're moving back down again after Thursday's doji and indecision candle. So we'll have to see how price responds to this expanding wedge, if it will perhaps bounce again up. But for the moment, downside is certainly something I would be cautious of, considering the double divergence. When zooming into the 4 hour chart, I think it's pretty clear that price will need to break above this resistance line here for the upside to have a chance again to move up to the top of the expanding wedge. The bearers are now in control, looking at price action on the 4 hour chart, and any retracement up back to the resistance line could actually be a potential to look for shorts around 77, 76.80 for more downside, as it has become a resistance spot. Well, thank you so much for joining this video analysis. I do hope to see you in the upcoming webinars this week, and I encourage you to take a look at the special deposit bonus and the conditions via this link. Wish you all good hunting and good trading. Cheers.